Can Trump save the housing market? Over the past couple of weeks, we've seen Donald Trump come up with a couple of ideas that he thinks are going to, one, bring down the prices of homes, and two, lower mortgage rates so that more people can enter into this market. In this video, we're going to cover these different strategies that Trump is looking to implement. We're going to talk about the impact on real estate as well as a couple of other assets. And we're also going to talk about what his true intents are here. Why is he really looking to bring down the prices of homes? Before we get started, please make sure to like the video and subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. The first thing Trump is looking to do to make buying a home more affordable is he wants to ban these large institutional investors from buying up single family homes. When these large institutional investors are buying up all these homes, it pushes up demand for housing and it pushes up the prices so that a lot of people in the lower class and middle class just can't afford to get into this market. Currently, institutional investors control around 2 to 4% of the single family home market. And when Trump made this announcement that he's looking to kick these guys out, they were not happy and neither were their investors. Let's go ahead and take a look at a chart of Blackstone stock on the day of this announcement. As you can see, to start the day, Blackstone was selling off. And then when Trump made this announcement at 12:45, we saw that Blackstone stock plummeted. And this makes sense, right? This is their whole business, buying up single family homes. They have the third largest single family rental portfolio in the US. They control around 60,000 to 62,000 homes. So obviously this is going to have a big impact on their business. They may have to pivot in a big way. We also saw that Invitation Homes, another large player in this space, saw their stock fall sharply too. Invitation Homes controls around 80,000 to 85,000 single family homes. So they are going to be potentially put out of business if this goes through, right? If they aren't able to buy up these single family homes anymore. For one, they may have to sell their portfolio. They may have to sell all these homes, which could lead to a real estate crash. And they're going to have to find a new thing to invest in. If these large institutional investors get kicked out, that's a huge source of demand that is now gone. And that's going to have a big impact on home prices. I kind of think about it in Bitcoin terms. If we saw that BlackRock or Strategy was kicked out of the Bitcoin market, as a Bitcoin holder, I would be concerned. And as a homeowner, I would be a little bit concerned if these institutional investors are getting kicked out because they're pushing up the price of my investment. Yes, it's maybe not a great thing that they're coming in here and making homes unaffordable for other people, but as a homeowner and an investor, I kind of like it, right? Your home is an investment and these institutions are pushing up the price of your home and making you more money. So as a homeowner, I would not be too happy and I wouldn't be surprised if we see a lot of these smaller real estate investors selling out of some of their extra properties if it seems likely that this is going to happen. If you think that institutional investors are going to get kicked out and it's going to lead to a housing crash and prices are going to come down, well, you might want to sell your home right now and front run that decline in prices. On the flip side, if I'm somebody looking to buy a home, I'm happy about this, right? Home prices are super high. Most people my age aren't buying homes because they simply can't afford it. If these large institutions get kicked out, it could lead to a decline in home prices, and that means that I may be able to step into this market. So I think that a lot of people, especially a lot of young people, are waiting for a decline in the housing market. They want to see prices come down, and this could be a catalyst that can make that happen. Now, another thing that we need to think about is if these large institutions get kicked out of the single family home market, they have to move somewhere else. And where could they move? Personally, I think that something like Bitcoin looks very attractive, right? Why do people invest in real estate? Because it's scarce. They need to get out of the money because it's losing its value and they need to move into a scarce asset. So if I'm not allowed to invest in housing and I need to find another scarce asset, Bitcoin looks pretty attractive. It's easier to deal with. It has a cap supply of 21 million. And it's very undervalued, in my opinion, compared to some other assets. Yes, gold and silver also have that scarcity aspect, but look at what has happened to gold and silver over the past year here. They have skied up higher. Gold is at a $30 trillion market cap, and as an investor, I don't know if I want to buy in right there when we could be nearing a top. So I think that we could see these large players like Blackstone and Invitation Homes potentially looking to pivot to Bitcoin. Something else we need to think think about is this right for the government to be coming in and telling these institutions what they can and can't invest in? I'm a free markets guy. I think the free markets do a great job of figuring things out, and I don't really like when the government gets involved. However, I understand the argument for why they would get involved here. These institutions have a ton of control over this market, and maybe it's time for the government to come in and say, it's been enough. I do think it could set a dangerous precedent, but I do understand that a lot of people my age can't afford homes right now, and a lot of people are unhappy. And for Trump and his administration, they are probably thinking that they can gain some good support if they come in and make homes more affordable. I also think that free market forces will eventually push people out of the housing market. I think that this market is overbought. Anytime people have extra money, they're throwing it into real estate and housing, as well as other places like the stock market and crypto. Why are they doing that? Because our money sucks. It's losing its value. I think that if we can fix the money, if we can move on to something like a Bitcoin standard, or go back to a gold standard, or just have money that holds its value, there's going to be a much stronger incentive to stay in the money rather than move into all these other assets. Looking over to Trump's second idea to help the housing market, he wants Fannie Mae and Freddie Mac to buy up $200 billion worth of mortgage bonds out of the market in order to bring mortgage rates down. If you're not familiar with Fannie Mae and Freddie Mac, these are these government-sponsored enterprises who are kind of responsible for helping out the housing market and the mortgage market, providing liquidity and stability. So Trump sees that these enterprises have $200 billion worth of cash sitting there on their balance sheets, and he wants them to deploy that cash. So I think this is a pretty smart strategy by Trump. For one, it wouldn't really be inflationary. It's not the government printing more money. This is cash that is already out there in the system. It's just going from Fannie Mae and Freddie Mac to the sellers of these bonds. If it does bring mortgage rates down heading into these midterms, it could gain him a lot of support. We saw that after he made this announcement, mortgage rates dropped below 6% briefly. So the market got excited about this. We can look at a little visual here of the 30-year mortgage rate. As you can see, briefly dip below 6%, the lowest level in 2 years. People are waiting for mortgage rates to go down. People don't want to take out a 30-year mortgage at interest rates between 6% and 8%. That is just too high, too much interest to pay over time, too much risk. So if this administration can get mortgage rates down, I do think it's a great way to build support, and it's going to lead to a lot more people entering into this home buyer market. While the buying up of these mortgage bonds may push mortgage rates down temporarily, this is not a permanent solution to this high mortgage rate problem. The only way to really solve this problem is to solve inflation, and the United States government, unfortunately, is not going to do that. At this point, with our debt situation and our deficits, inflation is only going to go up higher as we have to print more money to service our debt. Now, we could go through some sort of recession where we see asset prices crashing and where we see prices coming down in general. And if we see that, we may see mortgage rates come down too, and that may be a great time to get into the market. We can think back to 2020 when we saw the COVID crash. Mortgage rates went very low, and a lot of people got into the home buyer market at the right time. If we ever go through a recession, that might be the time to take out a fixed rate 30-year mortgage. If we don't go through a recession, if we continue to print money and asset prices continue to go higher, mortgage lenders aren't going to lend to people at a low interest rate. So why is Trump doing this? I think the answer is pretty clear. He's trying to gain support, especially heading into these midterm elections in November of this year. Whether you like Trump or you hate him, there's a lot of people out there who are looking to buy a home, especially these voters who don't make as much money. If Trump can make that happen for them, they are probably going to support him a little bit more. Circling back to the market impact, I am going to be watching to see if these institutional investors get booted from the single family home market. That would lead to a huge drop off in demand. It could lead to a ton of supply hitting the market and ultimately a housing crash. So it could have big ripple effects. You also have to think, where could those institutional investors go if they get kicked out of the housing market? Could they go to a place like Bitcoin? And also, if we do see a housing crash and people look to get into the housing market, what will they have to sell? Maybe stocks, Bitcoin, bonds, in order to get into that larger market, in order to buy a home. So a lot to think about here, and we will just have to see what happens. That's going to wrap it up for this one. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.